Hello everyone, welcome back. Patrick here. In this video I want us to have a discussion on whether it's time to transition out of SPACs or not. I know some of you are going to say absolutely not, SPACs are amazing, they're about to rebound. But some of you I know are totally lost in this market and really don't know what to do, because let's be totally honest, all of the strategies that we used in the past year that made us a lot of money, right? Back in December and January, you could buy almost any SPAC and they would go up 100%, 200%, no problem. Well, that was unsustainable. And now, as the economy is reopening, there's a new cycle in the economy that's happening, right? We're going from a buying cycle to a selling cycle. And now all of a sudden, we're really struggling with the SPACs. So whether we like them or not, there's some changes that we can do to really position ourselves for the next few years. And that's what this video is about, especially for you guys that have been struggling over the past couple of months. So let's get started. But of course, please like and subscribe. It really helps out. And I really appreciate you guys watching. Thank you. Alright guys, let me start by saying that when I ask the question whether we need to transition out of SPACs or not, I'm not saying that the SPACs are dead, the market is dead, there's no money to be made or anything like that. I still like SPACs, I'm still going to continue covering them, but there are less good ones, and even the good ones are going to take much longer to bring returns than they did in the past. So we have to shift our mentality a little bit. Realize that right now, all the growth stocks, including SPACs, which are considered like more growth, more speculative, they are all struggling, while the rest of the assets out there, everything else is doing fantastic and totally booming. So I'm going to give you a few examples here. First, we have IPOE SoFi. You guys know I like this company a lot. This is one of the few SPACs that I can see myself holding long term, right? This is a company that if we were a couple months ago, right, instead of being at $18, it would probably be at $30. People would be fighting to get into this stock before it merges. But right now, since the beginning of the year, right, we can't say that it has a lot of momentum or anything. It's hovering around $18, trying to find support. So we don't know what's going to happen over the next few months, right? Over time, as they announce more revenues and everything, possibly it's going to go up. But it's not going to have that same like enthusiasm and momentum that we saw before. Same for companies like Tesla. Like this is one of the darlings of 2020. And the beginning of 2021, it had gone up so much. But since the beginning of the year, look at how it's been downtrending. Then you look at another company that was one of the pandemic stocks, Zoom. Look at how it has been struggling too in the past couple of months since the beginning of the year. So it's not that there's anything wrong with those companies. If you think about it, Tesla is going to sell way more cars like next year and 2 years from now than they did last year. So you would think, well, why isn't the stock price keep going up, right? Well, the thing is that a lot of this has been factored in already, priced in, right? Not only that, but you know the expression, it's better to have a dollar now than a dollar tomorrow. Well, that's what is affecting the growth stocks. Is that a lot of people right now, like especially the bigger institutions and everything, they're like, instead of investing in growth stocks that are going to give us returns and make revenues and profits in 5 years, let's just invest in other stocks that are going to make returns right now. Look at some of the actual materials to build things, right? We looked at the oil recently. I showed you guys, and you can see that over the past year, look at how much it increased, right? From like $20 or maybe even lower than $20. And now it's over 60, the WTI. But now, thankfully for us, it looks like it's stabilizing right now. We have to see if it's going to go higher or not. But for now, it seems to be stabilizing. But all of the materials are going up. Look at the price of copper since 2020. And it is going straight up. It is higher than it was in 2018 and 2019. So if you guys have rentals, you know what you have to do. Put a cage on top of your AC, because you're going to have your copper stolen maybe. You have the price of lumber. Lumber prices are up a staggering 188%. When will the wood shortage end? Right? You see this across the board. I'm trying to buy a graphics card right now for my wife's computer. Well, you can't buy a graphic card under like $1,000 because of the scalpers and everything. Everything is going up. Look at one of my best stocks, which I plan on talking about tomorrow in a separate video, MGM. Look at how since the beginning of the year, while all of the other growth stocks are going down, this one has been going up very nicely. This is the type of chart that you would have expected last year from one of the SPACs. Well, why is that? If it is because everyone knows that over the next year, their revenues is going to skyrocket and go back to the levels of where it was in 2018, 2019, right? Plus, you have the iGaming and all of that. We'll talk about that tomorrow. You have real estate that right now in the past year, the price median has gone up 14%. Days on market down 14%. Active listings has dropped tremendously. So it is a pure seller's market right now. Then you have crypto. Crypto, I mean, you guys know it's been going straight up since the beginning of the year. Bitcoin, same thing. And then you have the NFTs craze, right? You have people selling something for 69 million. To me, it's a total joke, right? But it doesn't matter what I think. All that matters is that across the board, all the assets are going up, right? The only thing that's not going up right now is the big growth stocks and the SPACs. Well, that tells us something about the market right now. We are in a transition and we have to adapt to that. So here's what I'm doing and how I've managed that in the past. One of the most important lessons I've learned over the past 10 years, which was taught to me by one of my financial mentors, and now I'm trying to pass it on to you, is that we're never both in a buyer's market and in a seller's market at the same time. It's either one or the other. And even more importantly than that, all the asset classes move at different speeds. So you're going to have assets that are in a buying cycle and others are in a selling cycles. And once you understand that, it helps you be much more flexible and always go for the low-hanging fruit, right? So I'll give you a very clear example of this. Last year in 2020 was definitely a buyer cycle for stocks, right? You had all these great companies that were discounted 50%, 75%, 80%. Think about a company like Tesla that a lot of people wanted to get in, but it felt very expensive. Well, it actually dropped to $400 pre-split, right? So that was a great opportunity if you wanted to get into this company. And there's many others like these, right? So all of these now, 1 year later, are much higher, right? But on the other end of the spectrum, you had real estate, which was not in a buyer cycle last year. It's totally the opposite. There was a loss of supply, as I showed you in the graph earlier, like about 50%. At the same time, the rates were low, so there was much more demand. That made the prices increase. People listed their houses and they would get above asking price within a matter of minutes or even a couple hours, right? With no contingencies. So real estate last year and still this year is in a seller's market. So this, once you understand that, you realize that sometimes it's great to sell some assets that are at their peak to buy assets that are at their bottom. So that's what the flexible investors do. Like people that understand the game. Like I'm totally agnostic when it comes to investing. And that's why I've learned a lot of different methods of investing and I'm trying to share it with you guys, right? So if the SPACs are in a great time to buy, I'm going to buy them and buy and buy and buy. When it's not the best time to buy, I'm not going to transition out of them 100%, right? But I'm just going to keep it on my watch list and focus on something else temporarily. So that's why I showed you guys some of the growth stocks, people that are buying into oil right now, even though we hate oil as EV investors, right? Those are the type of companies that are doing really well right now. Commodities, right? All of those assets. So even crypto right now is doing really well. So that's what you want to do. You want to look for assets that are in the buying cycle, and you want to sell the assets that are at their peak right now. So clearly, in the past couple of months, SPACs were at their peak, and the other companies were at their bottom. So now, eventually, we're going to reach a point where it's going to invert, and SPACs are going to be the great opportunity to buy once again. Still think it's a little too early right now, right? Right now we're in the cycle where they're going down. But at some point, instead of being like this, they're going to start going back up. It's just a matter of time. There are some great companies in there. So SPACs at some point will become a great purchase again. And those other companies that are going up now will be a great time to sell. So we have to keep track of those. All right, guys, in the wrap up to the video, here's a few things you can do to reposition yourself for the next few months and the next few years. I'm still going to talk about SPACs. I still like them. They're still part of the strategy, but I am also going to talk about the other tools in my toolbox when it comes to investing, which are going to be appropriate for this new phase of the economy that we're going to be in, right? The first thing I think you really need to do, and so do I, is to work on my income and also on capital appreciation. There's never going to be a better time than the next year or two to actually buy and sell things, fix and flip stuff, launch a business, use your trade skills if you have any. You're going to make so much money because right now people are willing to spend. Like, they have money burning through their pocket. They are willing to throw money at almost anything. Some of the boxes right there, I bought them for $800, $1,000. 2 months later, they're worth $1,400, $1,600, $2,000. The prices are going up like crazy for every asset except for the ones we talked about earlier. Right? So this is the best time for you to build your money, and then once the market changes, right, and we get into that buying cycle, then you're going to be able to buy so much more than you could before. So kind of like what we did with SPACs last year, well, you want to do that with the rest of the economy right now. At the same time, the SPACs are not going to be a great momentum play right now. I could be totally wrong, but it looks like the SPACs, we're not going to see those huge appreciation like we saw last year. We might get 10-50% over 1 year, right? If we're lucky, that's going to be amazing. But I don't think we're going to see those 200, 300, 400% like we did before. A lot of the SPAC sponsors are bringing much higher valuations. Plus, there are a lot of SPACs looking for targets right now, so the valuations are much higher, and that doesn't leave nearly as much meat on the bone. So, we're going to need to put them on our watch list, the ones that we're interested in. And then, number 3, be patient. Once these are really at their bottom and no one's interested in them right now, which we're not there yet, right? There's still a lot of people like me clinging to them, right? And still thinking that they're going to at least stay stable. But at some point over the next year, there are some that are going to be really beat down, even worse than they are right now. And that's going to be the best time to actually buy into them, but for the long haul, not for a short-term momentum play. So let me know in the comments what you guys think. This is the very, very basic strategy of what you can do, right? Of course, we could go on for much longer than this and much more detail, but I hope it helps some of you that have been lost in the market a little bit and not too sure what to invest in right now. I'm saying, at least right now, in my opinion, number 1 is the most important. If you can get a better job right now, save more money, and then you're going to be able to redeploy it, that's going to be a real big wealth builder for you over the next 5 years. So guys, let me know in the comments what you think. I'll see you in the next video. Tomorrow I'm going to be talking about MGM, company that's been doing really well for me.